Hello and welcome to the market update for Tuesday, January the 11th. Again, if you have any questions during the week, make sure you either email those to me at jerry@traderspro.com. Let's get started with the analysis. Obviously, a big day yesterday with a bullish reversal. Hopefully, you're starting to recognize what I mean by a bullish reversal or a bearish reversal when those take place. It's important that you learn how to recognize momentum shifts. And yesterday was definitely a momentum shift. Now, how much follow through is there going to be to that? That's what we'll have to watch for this week. Volume was a little bit on the light side so far today. In some areas it was fine, but I definitely wouldn't characterize today as everyone's buying everything in sight and jumping into riskier assets or anything like that. They are getting into some of the growth stocks and some of the riskier trades, but they're not piling into them with huge volumes or anything like that. So we'll see what might be kind of going on here in a second when we look at the charts. As far as the direction alerts, obviously with the sell-off, momentum has pulled back. We're in the hold range there. Breadth is pulled back. We're in the trending range, but sentiment is still high and it's still in the extreme range. Now, what that tells me, and it's something that we've noticed on the last few sell-offs that have taken place, is that there just isn't any fear behind the selling, and I'm talking collectively as a market. I mean, obviously there are pockets where there have been some fear, or maybe even individual traders that were in the wrong areas that got hit hard, particularly technology, that weren't feeling some fear. But collectively, as an overall market, and that's what we're kind of looking at when we look at the sentiment indicators and things like that, is that there isn't a lot of fear out there that these sell-offs are going to morph into something bigger. Now, that's important because eventually that's what's going to, again, I keep bringing this up, but eventually that's what's going to cause the bigger correction, is because we are going to start selling off. People are going to get to a point where, hey, buying the dip isn't working. I'm losing even more money. And then you'll reach that panic where everyone's getting out no matter what. They don't care. They're not worried about anything about the company, any future expectation about the company. They're just getting out to avoid the pain of losing more money. But again, I keep pointing this out, and I know I've been talking about this for 6 months or more, 8 months or so, about watching, these indicators and expecting that at some point they're all going to move into this extreme range. And when they do, that's going to be the signal of the much bigger correction. Now, again, I don't want to imply that this is some magical software that can always predict big corrections. We can always have big corrections. From right here, we could. The market is in kind of a little bit of a worried state with the tightening that could start to happen and inflation that's out there. If there was some again major terrorist attack or some sort of a country their economy melting down or something like that, could trigger a much bigger sell-off. That can always happen, especially in these conditions. So when I talk about these indicators giving us clues and possibly predicting a bigger correction, that's under normal circumstances. That's without anything that comes out of nowhere, shocking the market and bringing it down earlier. And so, but again, these are things that we want to, obviously with those events, we can't plan for them or prepare for them. We don't want to be constantly avoiding getting in the market because we're worried about another 9/11 taking place or something that could bring the markets down, because those events are extremely rare. They might be a once in a lifetime type event. So we don't want to have that kind of fear where we're fearing the doomsday scenario or something like that. But I just bring that up just to so that everyone recognizes that there's always risk anytime you're in the market. That there's nothing that can prevent pain. Sometimes, the way we do it is the best we can is to manage risk and to take profits off the table, to move money out of the market into safer investments and things like that at times. And it's part of a whole financial plan that you can develop for yourself. But we want to keep an eye on these. I'll keep bringing them up, and you're really going to hear me bring it up when we do get into a situation, or if we do get into a situation where we start to see breadth get into that extreme range, we start to see momentum get into that extreme range, and obviously we're expecting the market sentiment to remain high or even get even higher. Another thing that is, we can look to keep an eye on here. Buy-sell ratios they started to come closer together here. Then they crossed. We had more sells than buys, but we're not in any sort of extreme range as far as this indicator is concerned. So not much to worry about there. The sentiment. This sentiment indicator is pulled way back away from that red line up there, meaning that we could still see a market rally here without it getting overbought or in that extreme range there. Another thing that we've been looking at recently is the buy-sell ratios of all the indexes. I told you that when they get to double digits, 10-to-1, 12-to-1, that's an extreme kind of overbought case. These have come way down to where, we're looking at 1-to-1 or even below 1-to-1 in some cases, with Russell 2000 is below 1-to-1, meaning that there are more sells right now than buys. That does indicate that there, again, could be room for a rally if the market decides to rally from here. Now, again, you can take what I talk about in these updates and you can try to compare it to what you're hearing on CNBC and other financial stations or websites and things like that. I think it's important to point out that that my approach is a technical approach, and this is what the software is built around. It's built around trend analysis and looking at charts. I'm not going to get too caught up with other people's opinions, or, I want to just focus on what the charts are showing me. Remember, what we're trying to do here is we're trying to just let the professional traders do all that work, analyze the market, form opinions on what they think if the market is a good value or overvalued or undervalued. And they're going to make their buying and selling decisions based off of that, and their buying and selling decisions are going to show up in the charts, and so we want to get really good at just reading what they're doing. The reason why I'm pointing this out is because what I heard a lot, particularly late last week when things were selling off, was people suggesting that the market was going to drop further, that we haven't even seen, we've got these interest rate hikes coming, and they're going to bring down the market as well. You always have to recognize that, sometimes when you're hearing some of this chatter back and forth, you always have to put in perspective the fact that the market is forward looking, that we've already sold off quite a bit in different segments, or different areas, particularly those that are going to be interest rate sensitive. They've been hammered. And so, you have to start to really look at the possibility that that's already been priced into some of these moves. Now, again, I'm not saying it, in some cases, maybe it isn't. Maybe we do have further to drop, but that is going to show up in the chart patterns, and I'm just not seeing that yet, or at least seeing any significant breakdown yet that I would start to really worry about. Now, I am going to show you when we get to the charts some things we do have to pay attention to, but it gets back to what I was saying earlier, that be careful when because people get really confused when they're brand new to trading. You know, you have these what appears to be very smart, successful people arguing, making a case for the reasons why the market should go up. There's really smart, successful people arguing their case of why the market should go down, and they're doing it at the same time. And you're sitting back there going, "Wait a second, who's right?" You know, and who am I supposed to follow, and who do I pay attention to, and how can these people be so smart and successful but be on opposite sides of what they expect the market to do? I think the first thing to realize is that that's what makes a market, is that there are these conflicting views, and so don't, you know, you're not trying to find the person that's right all the time. You're trying to focus on what is actually happening, what is actually taking place. So always make sure that no matter how many hours you're putting into listening to people talk on CNBC, you're putting more time into reading the charts and what is actually taking place, whether it's an individual stock or the overall market, because that's going to be a better indication of where you should be putting your money or taking your money out, is what is actually happening. What is the actual trend that's taking place there? Having said all that, let's take a look at market here. And you can see the bullish reversal we had yesterday. So here's where we opened. We gapped down at the open. We started to sell off. You started to see the VIX move up. There was a little bit. There was actually some fear building in that sell-off yesterday. And then what happened is that suddenly buyers started to come in. They pushed everything back up, and they managed to close the market up higher than where it opened. Now, again, being able to read that momentum shift. If all you did was look at the end result yesterday, you would have seen that the S&P closed down yesterday, and you would have said, "Oh man, it was a bad day. It was a negative day. We closed lower than we did on Friday, or excuse me, on Friday." But you would have missed that whole momentum shift that was saying there's a very high probability that we're going to move up off of this right here. That whenever you see that kind of this is not quite a hammer. This is more of a hammer because the body's a little bit more compact. But this is a bullish reversal candle, okay? And it was indicating yesterday there's a very high probability that we were going to rally up from that. Now, because of that momentum shift, yesterday's low is going to be very significant. We are going to be paying attention to that at least this week and maybe over the next few weeks. If we were to drop below that, especially within a few days here, if sometime this week we sell off and we go below that low, look out. We're probably in for a bigger correction at that point, or at least some further downside at that point. And it makes sense, right? Here there were smart people, and they had to been, professional traders to be able to move the market. They moved the market back up off of these lows. They were buying. Now, why are they going to be buying? Why is anyone buying? You're buying because you're expecting things to go higher. You don't buy unless you believe that stock is going to go up in value, right? You're never going to buy if you expect it to go down in value. If you think it's going to go lower, what do? You're going to wait. You're going to wait for it to go lower. You're buying because you believe it's going to go up in value. Now, your reasons for believing it can go up in value could be as well thought out as you analyzing the fundamentals of the company and the management team and the products they have and all that kind of stuff, or it could be as ridiculous as you heard someone on the subway talking about how their uncle liked the stock and thinks it's going to go higher, and you think that was a great idea, and you're going to go buy it. It doesn't matter what the reason is. You believe that stock is going to higher. Now, we're assuming that with that big of a reversal, that this is smart money that's causing that. So I would assume that big institutional traders are believing that the market should rally off of that low. If we drop below that low, what are those professional traders going to be doing? They're going to be saying, "Uh-oh, I'm wrong. We might have further drop." They're going to be selling, and remember, they're the ones that move the market. The market could drop very quick at that point. So that's going to be a significant low right there. Now, this type of behavior right here, where we have managed to go a little bit higher, but we're kind of chopping back and forth, typically, and this gets into Elliott wave analysis, and if you want to get some training on Elliott wave analysis, you can go into that YouTube channel under Traders Pro. Join the Traders Pro page there, and I talk about some of the stuff in some of those videos. But typically stocks, we know that stocks will tend to alternate between impulsive and corrective moves, right? I said typically when trends reverse, you tend to have an impulsive move up followed by an impulsive move down. And then you kind of repeat the process. You just kind of stair-step your way down. You alternate between impulsive and corrective as you move down. Now, trends tend to move in kind of, this gets into Elliott wave in 5-wave patterns where you get, you'll get the initial move of the trend. That's wave 1. You'll get a correction, wave 2. And you'll get usually the strongest part of the trend is wave 3. You get wave 4, and then wave 5 is the final part of the trend. And then you tend to reverse after that. Again, this is not an exact, but this is kind of a general way that trends tend to move. They tend to move in these cycles. Now, this fifth wave there's different ways this fifth wave can show up. It can be a very strong move. Sometimes it can be the longest wave of the trend. Sometimes it's very short. Sometimes you barely break out higher, and then that's it. You roll over. There's no more buyers left. It rolls over. One of the rare ways that this wave 5 forms is what we call a diagonal fifth wave, which is it's a real choppy type move. So you get wave 1, wave 2, wave 3, wave 4, and then you get this wave 5. And there's usually 5 waves within that wave 5, and they can overlap. In one of the rare cases where these waves can overlap, this gets into Elliott wave rules and all that. You'd have to go back and view those recordings to get those details. But you can get a wave 1, 2, 3, 4, 5, and it's kind of we call it a diagonal fifth wave because it's kind of a choppy type move. It looks corrected, but it's not, because it's advancing the trend. It is moving the trend higher, but it's moving it in a more choppy way. A true correction is usually going to be, when I talk about sideways moves or sideways corrections, they're usually going to be sideways. Either sideways or they're going to be pulling back. You're going to be pulling back against the trend. Those are more of your true type corrective type moves. When you see what looks like a correction, but it's actually going higher, a lot of times it's that diagonal fifth wave. It's the final push within a trend. So if that's the case, and it's looking that way because of the fact that this is choppy through here, but it's going higher, and it's having higher lows through here, it really is looking like a possible diagonal fifth wave. And this is kind of lining up with those direction alerts that are, with the sentiment being already really high, that's a signal of a possible market top. And we're just waiting for these other signals to become extreme. But that would mean that this right here is probably a wave 4. Because usually you have that wave 4, and then you start wave 5, and then this would be wave 1 of 5, 2 of 5, 3 of 5, 4 of 5, and this could be the final push. Now, if that is the case, we should go to another higher high. We should go to another new all-time high. That could be that wave 5 of this larger wave 5, and could be. And so this is, if that's the case, this move should be the one where we see those other direction alerts move into those extreme, the momentum and the breadth move into that extreme reversal risk range. And so that's something that we'll be keeping an eye on here. Again, I don't know for sure if that's going to happen. We could wake up tomorrow and, like I said, we could take out this low right here, and that's it. That thing is probably dropping if it takes out that low, particularly if it takes out this low and then this low. There was a major bullish reversal right here. If you wipe that out and you wipe this out, there's going to be a sharp elevator ride to the bottom there as things start to fall apart. Okay, I don't think that's going to happen yet. I think we're going to get this final push, and we'll see if that happens. But this is really looking. This overall move is really looking like one of those diagonal fifth waves that usually show up at the very end of a trend. Okay, hold on here. Yeah, you could, if you did back out to a longer term chart, you can see it in a little bit more detail. Now the Dow looks very similar. This is probably wave 4 right here, and then this is wave 1, wave 2, wave 3, wave 4. Now, again, some of you might be saying, well, Jerry, wave 4 can't trade in the territory of wave 1. You're reverting back to the Elliott wave rules, and you're right under normal wave counts. But in a diagonal fifth wave, you can overlap, and you do overlap. That's what's creating the diagonal type move to it. It's the only time where you can have that overlap is in that if it ends up being that diagonal fifth wave. And again, that would be for those of you that I get it that I'm talking about stuff that if you've never heard of Elliott wave analysis, this is all over your head. It's not making any sense to you. I get that. And maybe that causes you to be a little bit curious and go in and review those training videos. I would encourage you, because that's really where you get start to understand the psychology of the markets, these cycles that the markets move through. By the way, I'm not an Elliott wave fanatic. I don't believe that Elliott wave explains everything or can predict everything, or there's always, just because you see a wave count that it's going to guarantee that that stock is going to move up or move down. There are those fanatics out there that it's almost like a religion to them. And I'm telling you, there's nothing in the market that can tell you exactly what's going to happen. So I think if you believe in anything that you're studying or analyzing or using that you think is going to perfectly predict the market, I think that's the problem. That you got to change that, and you got to temper that, or you're going to get into a lot of trouble. But having said that, there's nothing that has taught me more about market psychology than Elliott wave analysis, and how human nature factors into creating these chart patterns. And if you understand the psychology of what's going on, it makes a lot of sense, and it does give you a lot more confidence, and it helps you identify the probabilities. There's usually, what we're analyzing right now is there's a pretty high probability that we're at the end of a market move right here, that we could be in for a little bit of a bigger correction soon. Now, again, that's a forecast. I'm not saying it will happen. I've had these situations like this where I've been pretty convinced that I'm seeing a particular wave count or a particular price action, and then the market rips off, goes into a run where it just goes straight up for several weeks, or drops, goes the opposite. Remember, as trend traders, we're not trying to predict, we're trying to forecast, we're trying to make adjustments. And that's what we've done. We've said, well, it's acting like that right now, but hey, all bets are off. We drop below these lows, these big bullish reversal days. I don't care how much you thought the market was going to go higher. It's probably not when those things get if the price moves below those. Now, not all the indexes are showing the same pattern. The NASDAQ is not showing a diagonal. It's not. Remember, this high right here didn't go to a higher high. We're not in it. This is looking sideways, right? But again, it's not that sideways move where we're still going higher. It's actually at a lower high here. You have lower lows here. So I would assume that this is probably just a normal ABC pattern right here. Wave A, wave B, wave C. And the expectation would be the same. So in other words, this is just probably a wave 4 right here, and that this will just be wave 5 if it does move up and break out. It won't be that diagonal wave 5. It'll just be a regular wave 5. Okay. At least that's what I'm seeing right here. And the bottom line is that, this still, whether you think that we're at the end of a larger trend or not, this is still looking like it's an ABC pattern that should end up resulting in a move higher. And so I'd still be pretty bullish on the market right now based off of that. But again, this reversal day, and this is probably even more important than the other indexes because, we already dipped below that. And this wasn't a real strong bullish reversal candle. This is more of an indecision candle here. But we already dipped below that, and then we reversed. So obviously, if it moved below here, the next stop is down here. So it would have a lot further to drop if it were to break below yesterday's low. So that is still significant. We're going to keep an eye on that. We can throw volume in here. It's not showing the volume. There we go. Oh. Yeah, volume is a little bit lighter. I don't know why it's not showing up there. But it's not too bad. You would expect to be a little bit lighter than yesterday because of that strong reversal. Now, another reason why I'm believing that the market's going to rally off of this, it gets back to the Russell 2000 as well. If we look at that longer term chart of the Russell, with that sell-off last week and yesterday, we got very, very close to breaking below this key support level. I told you if we break below that, the market is going to sell off, and we're going to break below those other lows if the Russell 2000 doesn't hold right here. Now, the Russell doesn't have to necessarily break out to new all-time high with the other indexes. In fact, if the other indexes break out and it fails to go to a higher high, that would be a pretty strong bearish divergence. And it's had a bearish divergence, the Russell 2000, for most of the last year, with it moving sideways with the other indexes going higher. So I'd almost kind of expect it to kind of do the same when we do start a bigger pullback. But that again, I was looking at that and saying, boy, we got really close to breaking below those lows. We'll see if it rallies up, and if we roll over and fail and break below there, that's going to be a key warning sign. Now, what would I do from a portfolio standpoint if I were to see that? I would probably, I'm not necessarily going to jump out of everything just to jump out. But I would, any sort of reversal in trend on the positions I'm holding, I'd probably take profits, get out, cut losses, go to cash, get to a cash position, because when you get that bigger sell-off, you want to be able to have money to come back in. That's a good question. How important is volume in today's market with such a large percentage of institutional volume occurring in dark pools? Well, the volume will still get reported. It just usually will happen a little bit later with the dark pool trades. They still have to be. They basically have a little bit longer time to report their trades, so you don't always see the immediate volume. But volume still can be read because you're still going to get not every transaction is going to be done in dark pools. Usually it is larger block trades that are being done in those dark pools. The volume has always been very tricky to read. And that's why I don't always have a requirement that I have to have high volume or heavy volume to make a trade decision. If I see a nice strong pattern and there's average volume, that's usually fine for me. But if there's a move and there's still very, very light volume and it's noticeably light, that still is going to be a little bit of a warning sign, a little bit of a concern, because it still is a measure of significance. And like I said, not all trades are being done in the dark pools, and so if you have especially on individual stocks, if you have an up day and it's on the smallest volume it's had all year, be very careful about buying into that thing. The move, that bullish move, probably isn't as significant as you think it is, and you got to be a little bit careful about that. So, all right, I got to hurry up here because I'm running behind a little bit. Bonds, TLT. We were talking about this getting a little bit oversold last week. That was last Tuesday. That was more of an indecision day there, not a real strong bullish reversal. But sometimes you'll get a reversal off of an indecision day. And so we were talking about maybe the possibility that we're close to a bottom. We did move a little bit lower. Had a bullish reversal candle yesterday right at this previous low right here. In fact, let me go to a larger one-year chart so we can maybe see the details of this a little bit better. So it's kind of holding this right here. We did go to a higher high up here, and it's possible we could end up going to a lower low. I think we'll get a little bit of a bounce in bonds. So I would assume that those bond yields will come down a little bit. And that's part of what's been driving the market rally too, is as soon as those bond yields started to drop yesterday, that's when the buyers came in. So there's something to keep an eye on, see if we do get a little bit of a rally in bonds. And that could be a little bit of a reason why the market rallies, if it can kind of rally a little bit from that oversold condition. You can see before we were at the reversal yesterday and the rally today, we were in that extreme reversal risk, oversold. Again, it can stay oversold. It could go even lower in an oversold condition, but usually it's an indication that you're probably due for a little bit of a bounce at least. And you combine that with the previous low right here that's acting as a little bit of support. And I would expect that we could rally up a little bit. But definitely the trend has been down in the near term. That's something to recognize: lower highs, lower lows. And so as of right now, it's still acting like a downtrend. And we'll see if that does continue to move lower. Gold, I don't want to spend too much time on gold. You can see the volatility just over the last week. Started to move up right here, and then it dropped one day way down here, and then tried to rally, and then had a bearish reversal day, and then dropped down here, and then rallied back up. Basically, gold is whipsawing, and we talked about that even with the bigger picture. When you look at the bigger picture, it's just been moving sideways for the last year or two, or particularly the last year. I would want to see it start trending in a strong way before I'd start wanting to trade gold. And I just don't see that here. I think you'd be kind of guessing on some of those whipsaw moves, and I'm not seeing a lot of, like I said, we're seeing some a bullish price action that immediately reverses into a bearish reversal and then a bullish reversal. And when I see something behaving like that, I back off and say, you go figure out where you want to trend, and then I'll join in when you can figure it out. I don't want to, because that's what this is showing you. This is showing you indecision. It's showing you that traders don't know where gold is going right now, and that's what's causing these really wild whipsawing moves. And so again, as a trend trader, I want to say, well, wait, you guys go figure out. I don't care where you trend up or trend down, but you figure out where. You professionals figure out where it's going to go, and then I'll decide if I want to jump on later and join you. Oil has been clearly trending up and looks like it's about to move to a new high. And you've got the higher highs, higher lows. It now coming back up to this previous high right here. Could it stall out a little bit, move sideways a little bit, consolidate along that area there before breaking out? Yeah, it can. It doesn't have to. It can even pull back from that a little bit before breaking out. But overall, it's still looking like a nice strong uptrend. And that would, again, what means oil stocks are really a good place to be. Dollar down the last couple of days here, but overall, this is still looking corrective. This is your impulsive move. This looks corrective. I think once this sideways correction is done, we should see the dollar break out and go higher. And then the VIX, I think it's important to point out here on the VIX that even with that, we had that reversal day, and the VIX did spike a little bit, but it didn't really spike that much, and relative to some of these previous spikes, that's even this one right here was a bigger move higher on the VIX. So again, it's just showing there's not a lot of fear behind some of the sell-offs. Again, at some point in time, that is going to change, but and that is what's going to fuel the panic selling, but I'm just not seeing it just yet. SMH, this is the semiconductor index. Again, this looks real corrective right through here. I would anticipate that this eventually will break out higher. Dow Transports. Now, Dow Transports didn't have much of a reversal day yesterday. It looks like they're having a little bit today, a little bit of that hammer candlestick formation, but we have had higher highs, higher lows. See if those stocks can start to rally. Bitcoin, it hit a low yesterday, reversed a little bit, it's up a little bit today, but it still hasn't rebounded as much as I would have expected it to. But that's something to keep an eye on as well, because that'll be a reflection of risk appetite too. If you start to see Bitcoin rally strongly, it could be an indication that some traders are taking on a little bit more risk. All right, so that, again, I would say overall, I'd be pretty bullish right now, and that's what I'm expecting this week. We can take a look at things on Thursday and see if we've had some fall through to the buying so far. Now, as far as the portfolio, well, first of all, let's go in and give you a couple stocks I like. I'm going to go down into, there's a lot of them that were already in our watch list out of these upper sectors. So if you're wondering why I'm kind of skipping through these, it's not because there's not good stocks in there that we're probably already, most of them we already have in our watch list. So, but I'm going to come down to business services here. There's a couple I liked. This RCMT, 97 strength rank. We've been in this before with the portfolio. Let me switch this back to signals here. I was in this right through here. Yeah, we got had this big drop right here that happened. But since then, what it looks like here is you've got so you have this kind of the bowl-shaped move right here. It got slammed, but it didn't go to a lower low. It still held a higher low right here. You had kind of an impulsive move down, impulsive move up, and then this is more corrective. So it's looking like this could start to make another run. I do want to wait for confirmation, so I'd want to wait for that to go back to a buy signal. Because who knows? It could still, we could have another day like this where it falls apart and does go to a lower low. But I like that kind of sideways consolidation after this kind of a V-shaped move right here. There seems to be a pretty strong support area right here. So if I did get a buy signal, I'd want to get my stop below there initially. You could always move it up, but that'd be a good place to put a stop loss. And then another one under business services would be this HSON. Kind of the same thing. Had kind of a V-shaped move. This is moving a little bit more sideways right here. I still want that confirmation for it to go back to a buy signal. Put a stop down below here to start. I'd probably put a stop down there to start, and then if it breaks out, move the stop up below here. And then I looked under the Muscle Stock tab, another place you can look for companies. If you're not necessarily looking for a particular sector, but you just want to look for high strength ranked companies, you could look under the new buy tab. These are stocks that have just gone to a buy signal. So I mean, some of these could be ready to go right now if you're looking for something to get into. You do want to make sure you're keeping at least, I would say, at least in the 90 range in the strength rank. And so try to keep towards the upper part of this list. But I like Seagate right here, STX, 93 strength rank. And it had a buy signal, went to a buy signal from a hold yesterday, and then it's kind of down a little bit today. But I like the kind of sideways corrective type look to it, as long as it kind of holds that breakout. Here's the breakout right here. So it moved sideways through here, broke out. And then what used to be the ceiling is now acting, well, we're hoping it acts like the floor. This thing can hold up here and start moving higher. It went back to a hold signal today, so you could, or it looks like it will, so you could wait for it to go back to a buy as maybe a little bit of confirmation that it's holding right here. That's a pattern I like. And then this top one right here, SNPX, 99 strength rank. And this is in the biotech, the medical biomedical sector. Now these can be, if you're going to be investing in biotech stocks, man, they can do this, where it goes from $6 up to doubles in value in a month and a half. They could do that, and they could do this, or even worse, it can come way down very quickly as well. You have to be in it. You have to be ready for a roller coaster ride in some of those stocks. And that's why stop losses sometimes on those stocks might be meaningless. And the way I would deal with that then is well, let's limit, let's almost treat it like an option trade there, where we're willing to risk what I'm putting into the trade. So maybe on a trade like this, I might say, it's a $9 stock. I'm going to buy 1,000 shares or $9,000. I'm willing to risk the full 9,000. Or if that's too much, you could say, okay, I'm going to buy, 500 shares and risk 4,500, and that's I'm willing to risk that entire amount. Basically not even have a stop loss, or you could have a stop loss, but it could be, but you're willing to risk the entire amount in case you get just a collapse that comes out of nowhere. Their drug that they've been working on for 5 years is not going to be approved by the FDA, and the stocks can drop 50% or more in value just off of that, something like that alone, and sometimes that news can come out of nowhere. So so just be aware of that when you're trading those types of stocks. But I like that pattern there. I like the pullback. Looks like a larger ABC pullback. I like kind of the bowl-shaped move it's kind of forming right here, going back to a buy signal. All right. Portfolio. I think I did I think I got out of some things last week. I know I got stopped out of. I got stopped out of KRUS. So just for those that are kind of following the trade history there, I think that's the only thing that happened between last update and this one. As far as the current positions, Lilly here, our stop is actually, we're right near our stop, but it seems to be kind of holding right here. Hopefully this can start to rally off of that area there. If it reverses and drops below here, here it was trying to find support. If it reverses and drops below there, I'll probably end up stopping out of that. LPX still looks fine. Had a bullish reversal day yesterday. Indecision day today, but it's still holding. Still has a higher low right here. It looks like it's putting in a higher low. I think our stop's down below here. LPI, nice up move today. Hopefully this one can start taking off. But again, so far we've been able to put in higher lows. So hopefully that's going to continue. Higher low right there. Tesla, bullish reversal yesterday. Hopefully this can start taking off. NSC got really close to our stop. Stop's right below here, I believe. Well, I have to go back and see on that one. Maybe I can't remember if I started it down. I probably put it down below here because I think we got into this right in this area. Anyway, that one's still okay. And again, you go back to that, the transportation index, the IYT, looked like we were putting in a higher low on that. Looked like it was going to move back up. So hopefully this is a higher low and we can break out again. So some of these, from where we got in, they might be down a little bit. But again, that's why I don't focus too much on whether I'm up or down, but what does the chart look like? And this is something that if you're new to trading, it'll come eventually. It needs to come at some point in your trading where you're not looking at you're not focusing on the dollar amounts, gains and losses, but the process, in this case the chart. Does the chart still look fine? I can be down on a chart and the chart still looks fine and I don't see any reason to get out of it. You're going to have periods where you're down. I mean, even if you have a gain, if you made $1,000 on a trade and the next day it pulls back a little bit and now it's 800, you've lost 200 of your gain. You're going to have that back and forth in the market. The key is to try to focus not on the gain and loss, but on the pattern, and that's what allows you to stay in these trends. I don't care if I gave back a little bit, because there's a chance it could be just part of that stair-step process where it goes higher. And as long as it's giving me higher highs, higher lows, let it keep going. Let it keep giving me higher gains. Now, when it finally is acting different, it finally goes to a lower low, maybe even has a lower high or something like that. It starts acting more like a downtrend. Okay, now is the time to get out and to take what profits I have and move on to something else. But it's difficult to try to, I get it. I mean, we've all worked, and that's part of human nature too, is that we all have these emotions of fear and greed that we get fearful when we're losing money. We get greedy when we're making money, but we have to have a process to kind of control those emotions. Otherwise, we'll be all over the place. And that's usually when you get wiped out, is when when you're making emotional decisions. UPS still looks fine, has a nice bullish reversal day today, hammer candlestick formation today. If it can hold that, it'd be a higher low right there. Good. I still love even the longer term chart of this, because not only do you have this larger kind of cup with handle formation here, but you have this smaller V shape. Actually, this is looking a little bit more of an inverse center shoulders pattern right through here. So much resistance here that if we can finally break out above that, this thing should really take off. So hopefully we get that. CLR still looks okay. Now, one thing we do want to pay attention to is we are getting, not only are we in the extreme reversal risk, we're getting to the far right side of that. Again, it could stay extremely overbought like that for a while. I still want to kind of at least target this previous high right here but what could happen is maybe we run up to that previous high and then we start moving sideways, and that might, sometimes moving sideways will bring us out of that extreme reversal risk there. That one still looks like it can continue to move higher. Now, I did want to add one from the watch list. Let's go into stock specific class here. Oh, you know what I didn't do? I didn't add those other. I'll add those other ones to the watch list that we went over. I'll add those after class. But I wanted to add SM right down here. SM Energy had a hold signal yesterday. It looks like it's going back to a buy. Again, I like this kind of like this bowl-shaped move. Looks like it can get back up to, at least back up to that previous high in the near term. It's also in the oil sector. And so what I'm going to do is I'm going to have a little bit of a tighter stop on this because of the fact that in context of everything, I believe that if we move below yesterday's reversal in the indexes, we're going to want to go to cash. We're going to get probably a bigger sell-off. So I'm just going to put my stop down below here. Normally, I might look to put it down below here and then kind of move it up as it moves higher, give a little bit more wiggle room to get started. Is it still possible it could, come down into this area and go higher still? But because of that reversal yesterday and it having a low right here, I'm actually going to bring it a little bit lower than that but I'm going to have a little bit of a tighter stop right here because if this thing rolls over, I'm assuming everything else is probably rolling over and I probably want to be out of that. So I'm going to put my stop in at about 29. So let's add to portfolio right here. I want to add it to the stock specific class. My stop price at 29. And let's see what shares will look like. I'll probably do 200 shares. Oops, 1,200, 200. So that'd put us about a little under 7,000. And then the percentage risk, I'd like to have that between about 1 to 1.5 in that range. Now, this is the dollar risk. If we get stopped out, we're probably lose about $1,000. That's typically about what I'll be looking to risk in that kind of $1,000 to $1,500 range. That is something to pay attention to. If that's too much, if thinking, man, if I got stopped out and lost $1,000, I'd be freaking out. Okay, then do 100 shares where have a $500 risk. Then just reduce the risk. And let's go ahead and purchase and go to my portfolio. All right. And that's all I'm going to add right now. Thursday is the stock specific class, so we'll also get a little bit more. We'll get a little more confirmation of the trend, whether it looks like we're continuing to rally, and so we'll see if we can add some more support for oil at that time. All right, that's all I have. Have a great week, and we'll see you on Thursday for the stock specific class. Bye now.